So what even is NFP? So NFP is basically non-farm payrolls, the jobs report, the one number the whole market stops and waits for. So when does it drop? The number comes out first Friday of almost every month at 8:30 a.m. Eastern. You should all put this on your calendar so it never can catch you off guard. And one thing to keep in mind is that when this number prints, everything moves. So what exactly is it? It counts how many jobs the economy has added or lost in the last month, plus the unemployment rate and how fast wages are rising. It's basically a pulse of the whole economy in one shot. And why does the market go nuts about this? Because strong jobs or weak jobs tell everyone what the Fed is going to do with rates. Rates drive everything. This is why one number can swing the entire market in seconds. And a perfect example of that is you'll see whenever the number prints that you'll have this massive volatility, and for example on the S&P, you'll see it spike up 20 points and then spike down 20 points. It's a very volatile read, which influence pretty much every single index and the direction of which way the market's going to go. So here's the whole idea. Forget about the number itself. What you want to care about is the footprint that it leaves on the chart. So when NFP hits, price rips in one direction and then it usually just snaps right back. And in that chaos, it carves out a high and a low. And those two prices are exactly where the big money stepped in and drew lines in the sand. And you've always heard me say lines in the sand, lines in the sand, lines in the sand, right? And what happens with these lines in the sands is that they don't get washed away and the market doesn't forget those lines. So my indicator does one simple thing. It grabs the high and the low of every monthly NFP session and it drops them onto your chart as a horizontal level. And it basically leaves them there for months so you always know where those big lines are. So it's going to give you the major support and resistance of each NFP print. So why do these levels actually work? So these levels were made by real money. It's not some random line that I drew because it looked pretty. These levels got built by massive institutional volume. You always want to have these levels that you know are being influenced by people that actually move markets, not by some random retail trader. I want you to think about these levels as magnets, right? Because people always, not people, but the market always seems to come right back to them. And I always talk about bull and bear magnets, right? So think of those NFP levels as bull and bear magnets based on where price is at. And what's great about this is that everyone sees them. Since NFP is one of the most watched reports, every desk, every fund, every serious trader is looking at the same reaction. So when everyone watches the same line, everyone trades it. And it becomes kind of a self-fulfilling prophecy because these levels are there and they're not being fabricated by some, let's say some guy named Steve or some guy named Joe. These are institutional levels that are now set that you can always reference back to. And then there's the fact that they flip and repeat because price comes back to it weeks later or days later and it reacts right off those levels. So like think about this, right? Old support turns into resistance, old resistance turns into support, and you'll watch this happen time and time again. So here's a real example, Apple. So those purple lines on the screen that you see, those are the NFP levels, which I'll show you back and I'll reference back to them on the chart. Watch how price literally reacts right off of those levels. It does basically the work for you. I'm not saying that you shouldn't be drawing your own levels, but look at how well price acts off these NFPs, right? You can see that Apple had a huge support at this June non-farm payroll level from 307. I believe that was the level. I apologize that it looks so small, but when I open up the chart, you'll see it. Yeah, 307 was this huge support, and then Apple just ripped, right? So look at how well price reacts around here. Here's another example. We went to June and then you could see that it created a little buy zone here and it held June, and then July non-farm payroll. The high of July gave you this great structural buy area, right? If you're talking about great areas of opportunity, well, here's a perfect example, right? Apple came all the way down to this February, November farm payroll, non-farm payroll low. Then it came right back up to that February high. And look at how well it just started going, right? Obviously, the February print was there before May, but you can see how even when the February print came out, we never came back to it. So clearly people, or the market, didn't want Apple to go below 278, 280, right? So let me keep going. So reading one level the right way. Every NFP level gives you the same four things. And this is how I read them, right? You get the high, which is the top of the wick. Then you have the low, which is the bottom. And then you have the zone. And then you have the reaction. So the high, obviously the top of the wick of the non-farm payroll session. Price above, This is resistance, price below, below price, it flips and becomes support. The low, the bottom of the NFP session, of course. I mean, it's self-explanatory. And then the zone, never treat it as one exact price. Give it a little room. Price reacts around the level, not to the penny, as I always say. So, give it a little bit of an area. If you see that there was an NFP low and price is going down to it, don't automatically hit the buy button. Let it react and let it have a little bit of breath, because if it goes right underneath it and then the price wants to come right back up, don't set your stops right underneath the non-farm payroll low. Kind of give it that area. And then the reaction, and this is what really matters. I don't trade the lines. I trade how price behaves when it gets there. A wick, a rejection, a hold. That's my signal. So keep an eye on the reaction around those levels rather than treating it like an exact science. Just see how the volume picks up when you get to that area. And if you're reading tape, or if you're level 2s, right, you can see that a lot of the times there'll be major buy areas in those NFP levels. So something to keep an eye on. That's how you'll see the reaction of that line in the sand, one would say. So here's how I actually trade them. The level is the map. What price does at the level is the trigger. I never skip that second part. So confluence is king. A lonely NFP level is good. An NFP level stacked with like moving averages, like most of the guys here that we all kind of trade similar to Kevin, where we have the Briani ribbon, which is the SMAs. You stack that with volume and NFP levels, you're gonna have a good setup that's gonna give you, I don't like using the word edge, but it's gonna give you the confidence that you need to make sure that everything's aligned, right? So for example, if you have a chart side by side, let's say you're looking at the 30-minute and the daily, and on the daily SMA, the 10-day SMA is lining up with a non-farm payroll level, that's a great indication that that's probably going to be a good area to keep an eye on, right? So confluence is king. Risk goes at the level. You guys have heard me say that I like to lean on trades, so I lean against it. Long just above an NFP low, stop just under it. That gives me a tight defined risk instead of hoping and guessing. If a level breaks, I'm out. No story needed, right? So you go into this with a plan. And you trade the flip. When price breaks a level and comes back to tap it from the other side, that retest is one of the cleanest entries in the game. And Kevin is very good at doing that. He's very good at waiting for price to retest those levels, right? So give yourself that opportunity to let price come back to prove that those NFP levels are valid. So let's say that you did break an NFP high and it went right through it, and then it came back to retest it, and then it started to rip again. That's a great indication that that non-farm payroll level high is a very, very, very strong area of support. Because remember, if it was resistance at one point and then it broke through and it came back to retest, that's the support, right? And then wait for it. I don't front run levels. I let price get there and show me it cares. A rejection, a wick, a hold. Then I move. I always trade with confirmation over prediction. Every single time, because patience is the edge. So a perfect example of this is yesterday, Friday, I was in 744 SPY calls, and it was trading inside of these zones. And what I did was I waited for SPY to give me signal that that level that I had, right, was confirming what I wanted to do. So I took the 744 calls, and price came down. It tested my buy area. I went long, and then it just ripped to like 746, and my trade went well over 100%. But here's what I did. I didn't want to front run the level. I wanted it to come back and test it. And that's a perfect example of how you would treat a non-farm payroll level, right? If SPY or if Apple or whatever it is trading at a non-farm payroll level, and let's say that it rips through it and then it comes right back down and it tests it and it aligns with an SMA, and you want to go long, there's your risk, right? Your risk is going to be that if it comes back and breaks below, the bottom of that NFP low, you would be out, right? But the most important thing is the patience, right? Being patient and understanding. It could be for a day trade, it could be for a swing. That retest is important. So never front run the level. Let it happen. Let it go and come back, and then take it. I've seen a lot of times people try to treat the NFP levels like an exact science, and they've got them burned because they've gotten stopped out. Because you'll have, I hate using the word liquidity grab, but you'll have price break right through it, they get stopped out, and then it rips, right? So just be patient. So don't do this. These are the mistakes that people make with this NFP indicator, and I've explained this to other people before, and they still keep doing it over and over. So here are the top 4 mistakes that you need to avoid. Treating the levels like an exact price. Price does not respect the line to the penny. You have to give it room. I've said that time and time again. I've seen people trade these levels with nothing else. So they just have one level and no other confluence. That's not good. You want to always have confluence. You want to have other type of indicators that align with those levels, so you have more proof and certainty that what you're doing is correct, right? Be aware that indicators or levels, nothing is an exact science. You're just trying to find something that can be of assistance to you. So that old saying, less is more, and that is true, but in this case, don't just have one thing. Find a moving average or volume or something. Don't just have the NFP indicator on. The other common thing that I said is before is, front running the bounds. Buying before prices even reach the level and proves that it holds. You cannot do that. Wait for confirmation. And then the other thing that I see is people ignoring the flip. People keep treating broken support as support. Once it breaks, it's now resistance. Respect the flip or it will run you over. So I don't do these 4 things out because it's the most common 4 things that I've seen whenever I've given people this indicator or taught them how to use it. They just don't respect it, and it's very important that you respect it. Respect the levels, but also respect the structure, right? Respect the structure of the chart. The rules all in one place. Levels are zones, not lines. Give them room. Confluence turns good into great. I keep saying it. Stack an NFP with a moving average, a trend line, etc., etc. The flip is your friend. Broken support becomes resistance. Broken resistance becomes support. Trade the retest. Confirmation over prediction. Let price prove itself and respect the level. And the last one is risk always goes at the level. Lean against it with a clear out. No level held, no trade, simple. I want to repeat that again. Lean against it with a clear out. Go into every single trade, if you're using the non-farm play NFP indicator, go into it with a clear out. Don't let it just bleed through it, and because you thought it was going to bounce and it broke through it, thinking that it's going to come back. Don't make those mistakes. That's how you lose accounts, right? And lastly, trade the levels, not the noise. The indicator hands you the map every month. Your job is patience and confirmation, and that's the whole game. So now that I kind of showed you, I'm sorry, not showed you, but went through the brief PDF presentation, let me show you the actual indicator itself. So I'm going to exit out of this. I'm going to go to my chart. And as you can see, I have a relatively clean chart here. But let's go ahead and use the one that we have as an example in the PDF presentation. So this is Apple, okay? Obviously I have my own levels. And let's turn on the indicator. So NFP indicator is already loaded. It's going to load, and there is the indicator itself. So let me show you on Apple how this worked. I'm going to put this on a 1-hour time frame. Okay? And look at how well price has been reacting to every single non-farm payroll level. We came all the way down here to this 273, which was a break below that NFP low. And then when we got back above it, notice how we never came back to touch it, and support became 280. Price ripped right through it, right? We didn't have a March print. Moved over to the May print here. Look at how well it held, right? Then it ripped all the way. It used these June levels as support at the low. And then we got the July print. We got the high, which was the 309. And then notice how price gravitated towards that June print high, right? This was the June low, that was the June high. So this was the zone that it was trading in. It didn't want to drop below that 307. And that's since June 2nd, huh? Didn't want to drop. Just kept holding. We knew that this was a huge support. Couldn't rip above 315, and then when it did, and it finally did, right? Notice how when it ripped, it came back, retested it, came back down just a bit, but then came right through it again. So that bull magnet of that 315 was your magic number, right? Once it came right back to 315, and you could tell with volume that it wanted to rip through that June high, it made a monster move, right? I was actually in the Apple 320 calls on this day when I saw price try to rip right back to that 315 right here. I caught the 320s, and this went all the way to 324. It was a really nice trade. I got a lot of praise for catching this one. So pretty standard stuff, right? Nothing crazy. And we can go all the way back here, right? Look at how well price has been moving inside of these areas. So super useful tool. And again, it's not an exact science, but it sure as hell does give you a great institutional level, right? Something that is worth watching. So let me actually show you now what the indicator is called. So you're going to come over here, and I obviously already have it saved, right? It's called the NFP high/low level plus. So it's by a guy named Ragman, and you'll notice that a lot of people don't use it, which is kind of sad, but all you gotta do is just type NFP high, low, and you're gonna see this guy pop up, okay? So once you add it to your chart, you're gonna come over here, and you're gonna go to settings, and you're gonna go to inputs. And here's the beauty of this. These numbers probably look different on yours than they do on mine, okay? But these are the correct NFP dates and upcoming releases for 2026. These numbers can be obtained, and I feel silly for saying this, but the BLS puts out these numbers ahead of time, right? So all you got to do is go to Google and type, give me the full calendar release date of the upcoming year's NFP, right? So you just plug them in. You guys can take a screenshot of this, or if you're watching this video, pause it, and then you can just copy it, right? So you're probably gonna say, hey, JP, that's cool and all, but like, for example, what happens if it's October? Are we already gonna get the dates for January 2027? Yeah, you will. So what you end up doing is, once you get to October, you plug in all the dates for 2027, right? And then you let the year run out. And then once the year runs out, you add the October, the November, the December 2027 numbers, right? So what I like to do is, if we're in the beginning of the month, of the year, I like to leave the previous fourth quarter NFP levels, right? So for example, let's say that it was, it's the end of the year, or it's January 2027. I would leave the October, November, December 2026s. What I basically want you to understand is that I like having the previous quarter of the new year on the chart, just because I like to see how price reacts to the previous quarter numbers. Okay? But if you don't want to have the previous quarter numbers, you can always just put the entire front year. I just like having the previous quarters as a reference. So I'm going to keep scrolling down. Everything pretty much remains the same. I don't believe I made any changes to any of this. All of this is checked off because you don't need it. Keep scrolling down. Nothing here has changed. And everything pretty much is default. I'm going to leave this up here for a moment so you can see it. And then I'm just going to scroll right back up. Nothing is offset. The only thing I use this for is just to chart out the levels. Style, everything pretty much remains the same. And I think we all realize already that the visibility thing here on every indicator, nobody ever changes that. And I'm just going to click OK. I'll give you another example so you can see Microsoft. And we can see if I can show you on the daily. That's funny, Microsoft aligns with some of my levels. And let's go to a smaller time frame. And there we go. See? This July NFP low on Microsoft. Price reacted through it, held it, ripped through that February low, through that July, came back down, tested that zone, and it's holding this area. Let's use another example. Cisco. Cisco is one of those companies that reacts very well to NFP levels. So here we go. You can't see that, but right here there's a June NFP level. We rejected it, came here, tested this July. Notice how we came right back up above it, failed to hold it, and then we dumped. And now we're holding that July NFP low. I don't even have a level there, it's just holding it. I'll do one more. Let's see QCOM. I have quite a few levels on QCOM, but again, look at how well this functions. See? Right now, QCOM is rejecting that July low, right? Ideally, we would want QCOM to get right back above this July 172. Because if it does, it's going to rip to 174. That's going to be the bull magnet. And if it rips through that, it's going to go to the January high. And then everybody knows this beautiful 185 number on QCOM, right? So then when I start flipping other things on, let's just flip on volume, right? And let's flip on our SMAs. So here on the 30-minute, right? If you were just trading off the 30-minute chart, you're about to have a 10-20 cross. And here's your 50. And look at how well that 50 is lining up with that NFP level. It's not off by a lot, right? So if you were trading off the 30-minute chart, you would know that right around here, there's going to probably be some profit taken. But if we rip above that SMA and that January low, well, ain't nothing stopping us from going to 179. Let me go ahead and put this chart on the daily and see how well those SMAs are lining up with those dailies. Well, oddly enough, that 100-day SMA is lining up with 172, right? So just as a quick reference, that's a perfect example of an SMA lining up with an NFP level. Here's the 50-day SMA lining up with that that May NFP low. You come over here, right? We can see how well on the daily QCOM traded inside of this area, right? Every time it would come up to an NFP level, it would reject. It had a hard time getting above it. Then it would rip through it, and it had that wall here. And notice how it traded inside of these NFP levels up until we have earnings, right? We ripped up here one day and then earnings came out and it just, boom, went to its next NFP, which is right there. So again, a great little tool to use for you guys that want to have institutional levels that actually mean something. Now, this is not your end-all say-all, but it sure is a helpful indicator to have. The reason I use it, and the reason that I'm a big advocate of it, is because this is a number that everyone sees. Everyone sees these numbers. Everyone has them written down. So why not have something on your chart that you know has substantial meaning? And again, if we were to use it on SPY, here's a perfect example, right? Look at how SPY is holding that NFP low 740. We came right to it on Friday. This is a trade that I took on. Look at how well SPY reacts to that 740 range. This print came out in the beginning of July. This is July 8th. So we know that there's going to be some SPY buyers here. We know there's going to be some SPY buyers down here. But if we break through both of these NFP levels, then, you know, we're going down. If we were to break through all of this, right, I'm not saying that we're going to come back to retest 695, because that would be the January NFP high, right? But God forbid for all of us, let's say that we did break below that 725 and that we did get through this 715 wick. What's to stop us from coming to